Hey guys, my name is Abel. I'm new to the team, and in this video I would be asking Francesco some question about Bitcoin. So first question, Francesco, why do we need Bitcoin?
In essence, our economic system is increasingly fragile and insolvent. We currently are at approximately $35 trillion in debt in the United States of America, the largest economic system on the planet. And we are seeing an accelerating pace in debt levels and money printing in all major economies around the world. With that, we're seeing incremental debasement in currencies. What that means is their purchasing power value is decreasing significantly over time. And since the depeg in 1971, when the United States decided unilaterally to depeg the dollar from the underpinning gold, which it was linked to, all currencies, bar none, have lost anywhere between 90 and 99% of their value. So with that, it is no wonder that we're in an environment, we have been in an environment for some time where there is growing skepticism. There are growing questions around who to trust. How do we trust an economic system that is leading us down this path? Is it sustainable? And are the decisions being made by centralized governments and financial systems, central banks, really acting in the best interests of citizens around the world? These are the questions that I believe many people are asking, certainly have led to the creation of Bitcoin.
Can we break that down a bit? Help us understand this problem a little further.
So if we break it down a little bit further, it starts with debt. Our system, our economic system, is based and predicated over a system of debt. Nothing works without the underpinning debt layer that underpins our economic systems. Roughly speaking, just looking at major developed economic systems around the world, from the US, Europe, Japan, and so on, it takes approximately $4 of debt for every dollar of growth in products and services. Just think about that. $4 of debt for every dollar of production. This isn't just a US syndrome. All major economic systems are operating this way. The level of debt is growing significantly faster than the level of production. GDP, gross domestic product, is the number we attribute to signal the level of any given economic system. It tells us how productive, how strong, how solid an economic system is. We've been in low single digits as far as nominal GDP levels are concerned. And those levels that denote the growth of our economic systems are growing significantly lower than the rate at which we're indebting our economic systems. That isn't healthy at all. And whilst debts and credits have been around for thousands of years, we've had these in ancient barter economic systems as well, is the level of debt that we should be mindful of. If we take the US dollar and the United States as a reference country, as the largest economic system in the world, as the global reserve currency in the world, we're currently running a debt level of 35 trillion, and that number is only growing irrespective of whichever party's in power. It doesn't matter whether Biden or Trump will be elected this year. We're at 35 trillion, and that number will keep growing. In fact, we're now at a level whereby the US really are stuck in between a rock and a hard place to be able to service that debt they're taking to be able to run the country. So what does that really mean in practice? That means that taxpayers' money isn't sufficient to operate the the amount of products, services, infrastructure, medical systems, pensions that a country is required to run on any given year. So what does that lead to? It leads to issuing debt. It borrows money from the future to fund that deficit gap they have, that budget gap they have today to run and operate the country. And these debt levels are indeed global. They're not, in fact, the very same countries we'd attribute as the strongest economic systems in the world are those with the highest debt levels. The US, Central European, all countries in Central Europe, in the Far East, Australia, Canada, you name it, Japan, they're all in the same place. With that, we're also seeing an accelerated level of money supply growth. Money printing is effectively an injection of capital into the economic system to permit the economic system to keep running, to keep funding economic growth. But that is only artificially so. It's only increasing the amount of money supply, giving us the impression, notionally, that the economic system keeps running healthily. But what it isn't showing us is that actually, as money supply keeps going through the roof, as we're increasing that level, just think about it. Since 2020 alone, the US has printed 80% of all dollars in circulation. That just at the start of 2020, we had $4 trillion in circulation around the world against the 19 trillion we ended up with at the end of 2023. That's up almost 4 times in 3 years. And it's showing no real sign of settling down. So as I said before, what happens when we are able to manipulate our currencies is we see inflation and in turn debasement. The more money there is in circulation, the more dollars, the more francs, the more pounds, the more euros are chasing, roughly speaking, the same amount of goods and services. That creates inflation, or otherwise put, debasement of your currency. So every time we've unpegged currencies, fiat currencies, from anything of solid value like gold, which we did for the last time and since then haven't really turned back, we can see that all currencies have lost their purchasing power by a significant amount. In fact, over the last century, they're all down by almost 100%, all of them. Put in the words of Satoshi Nakamoto, the creator of Bitcoin, the root problem with conventional currencies is all the trust that's required to make it work. Central banks must be trusted not to debase the currency, but the history of fiat currency is full of breaches of that trust.
So we need to fix the money, right?
Yes, indeed. We do need to fix our money. We have to snap out of this bubble we're in. We've only really had money form in the way it currently is. Fiat currencies, by which we mean the dollars, the pounds, the euros, and the francs in circulation today, only have their value conferred to them by the issuing countries and central bank. But per se, there is no intrinsic value in those currencies, in those pieces of paper or digits we see on the screen. Until then, in history, until the creation of money the way we think of it today, completely unbacked by anything, all money forms were backed by real nature, real stones, cocoa, or real labor required to extract hard sought gold nuggets out of the ground and turn them into valuable precious metals that could underpin the trade and economic exchanges required in society. And in fact, until 1971, gold was still largely the sole underlying value system over which currencies were operating, over which receipts of that gold were trading against one another. So absolutely, we need to go back to a value-based system, to a hard money form. And that, in a nutshell, is what Bitcoin promises to have, a bit like gold, but in truly natively digital form.
So what is Bitcoin?
At the peak of the global financial crisis in 2008, Bitcoin was announced to the world by a pseudonymous author by the name of Satoshi Nakamoto. What Satoshi Nakamoto did was produce a 9-page white paper outlining a model for the first truly decentralized peer-to-peer monetary ledger based on cryptographic security and use of energy, eliminating the need for intermediaries. This monetary network was not to be run by banks, institutions, or even governments, as has been the case for centuries, but rather by a decentralized, voluntary network of participants. We refer to them as miners.
Okay, so what is a miner and what do miners do?
Miners perform two fundamental roles. One, they validate the transactions going through the ledger, and two, they secure the network, rendering it truly immutable over time. And every 10 minutes, miners ensure that a new block is added on to the existing chain of block, the blockchain, as we think of it. And hence, to date, with no CEO, no founder, no board of directors, no insiders, no website, no executive team, no customer support, blocks keep being added one after the other every 10 minutes. And we're now 15 years and over 840,000 blocks into Bitcoin's history. Importantly, what Bitcoin solved for was the double spend problem. Through timestamping on a ledger, no participant could spend their money 2 or more times, tricking the system. So no malicious actor can claim to hold on to their asset, to their amount of Bitcoin, and try and spend it multiple times. Once a transaction is triggered, it can no longer be unwound. Balances are instantly adjusted by the network of validators, the miners, avoiding this double spend problem. This was one of the key innovations that Bitcoin brought to the world.
So when was Bitcoin launched to the world?
The Genesis block came about just a few weeks after the white paper we talked about earlier. So if the white paper came out at the end of October 2008, so during the global financial crisis, the first block was produced in early 2009. What's interesting is that Satoshi Nakamoto inscribed in that Genesis block a little piece of provocatory language alluding to the state of affairs in the economic system of the time, whereby the chancellor of the exchange was on the brink of a second bailout to bail out the banks.
Okay, Francesco, so can you tell us who is Satoshi Nakamoto? Who is behind Bitcoin, basically?
I certainly don't know who Satoshi Nakamoto is. I don't think anyone knows this far in 15 years that Bitcoin's been up and running. But what we certainly know is that Satoshi Nakamoto didn't work in isolation. He didn't just suddenly wake up creating an innovative piece of technology. He truly created a technology by assembling a whole host of innovations that have been made over the course of the prior decades. So I think it's fair to say that Satoshi Nakamoto and Bitcoin were created on the shoulder of giants. Timestamping, which I alluded to before, or peer-to-peer networks, e-money, proof of work, digital cash, are all concepts that were evolving and had been worked on over the prior decades. So I think a lot of credit should go to Satoshi for having brought together and assembled these ideas and released the white paper in 2008. But we should not forget that this is not a one-man effort. There's a hell of a lot of innovation that came about before Bitcoin, and that enabled Bitcoin to do what it's done.
Okay, so who controls this new monetary ledger? And say differently, how does Bitcoin work?
As I said, Bitcoin is simply a monetary ledger. It is run by decentralized nodes, decentralized miners who ensure that all the transactions going through this ledger are accurate, time-stamped, verified, by this network of computers, needing a lot of computational power to validate transactions going through this ledger and making sure that it remains secure. The larger the amount of mining activity, the larger the security of the network, the more decentralized it remains. There's a word for it, which is called the hash rate, the level of security, the level of mining activity, the level of computing power devoted to this network, not by a central authority, as I said, not by a government, but by a decentralized group of miners that are completely disconnected to one another, operating these facilities around the world in validating and securing this network. So effectively, the use of power, the use of energy that goes into mining is really a feature. It's not a bug. In fact, it's a bit akin to having servers, infrastructure, security wards, vaults to protect banking infrastructure. Banking infrastructure, as is, already uses a lot of energy, if you like, in the form of buildings, security measures, vaults dug several meters under the earth. That also comes with economic power and use. We haven't really thought of it, or maybe haven't broken it down this far yet. So if it is true that Bitcoin uses a lot of energy, well, I think it's fair to say that the current economic system and monetary system made of central banks and banking network and infrastructure also uses a lot of energy to run that infrastructure, from buildings to servers to machines to people to guards to vaults. You just add it all up. There's a lot of energy and cost that goes into maintaining and running the current infrastructure. And with that, you end up with a system that no longer looks at one centralized counterparty. Let's use the example of a central bank, or of any bank, in fact, that runs the infrastructure and checks the balances, the debits and credits between different parties to a transaction or a trade, and make sure that that ledger is maintained. Bitcoin no longer entrusts a single party anymore. It just trusts its decentralized network that are running the infrastructure, all of which are looking at all of the transactions, validating that nothing fishy, nothing scammy is going through them. All of these miners have to have a complete and updated and reconciled ledger running on each of their machines. So nobody can have a different version of the truth. And if anyone was to try and add, if you like, a distorted version of that ledger, then that one miner would have to persuade all other miners in the network, or at least 51%, to try and attempt to change the history of the ledger. Very, very hard to do that, particularly now that the computing power level and the level of decentralized mining activity has grown significantly, and therefore rendering it very, very difficult for any company, state, sovereign state to take over. I think we're well past that possibility at this point.
So is Bitcoin truly a scarce money form?
Absolutely. Bitcoin really does operate in a digitalized form of gold. That scarcity in its supply was engineered into its code. This is truly programmable money. And what I mean by that is, just like to a degree with gold, there's only so much gold that we dig out of the planet every year. There's only so much gold available in nature. And approximately we believe we add 2% of new gold. We dig out, we mine 2% of the global supply every year. So that's the inflation rate of gold. We're adding 2% of the total supply of gold every year to the existing level of gold we have. With Bitcoin, it's a little bit similar. That idea has been programmed into its schedule. And every 4 years, the amount of new Bitcoin that is issued just halves. And we get a line, if you like, in supply. We had significant issuance level at the beginning of the life of Bitcoin's history. And that level of issuance is starting to plateau now. In fact, we've already issued well over 90% of Bitcoin's overall programmed supply, and it will carry on until 2140, when we're expecting to see Bitcoin's total issuance being out in circulation. we are now already just 15 years into Bitcoin's life at a state where Bitcoin is already scarcer than gold. It's less inflationary than gold. There's less new Bitcoin added to the supply of Bitcoin than there is new gold added to the supply of gold. What we have on top of that is we're able to work with it, store it, save it, transmit it, transact it, move it around the planet at a click of a finger in a truly digitally native way. So we started with gold as a physical money form with intrinsic properties that made it a strong and stable underpinning force, if you like, that nourished and supported economic trade for centuries, until we've turned that into a more politicized form of money when central banks and later on governments started getting involved in its workings. For a period of time, anchoring currencies to the value of gold and then eventually detaching it completely, therefore politicizing its use, manipulating its supply, using monetary tools like printing new fiat currency or tinkering with interest rates to drive economic activity. And now we're seeing the birth of a new monetary form that is akin to gold in many respects, but instead of having intrinsic physical properties, it has cutting-edge engineering and mathematics at its core.
So where are we now? What Bitcoin achieved this for?
If you really think that 15 years ago, we literally just had 9 pages worth of a white paper. A white paper was an idea of how an economic and monetary system could work differently to anything we've had to date, whereby users could hold an asset and transmit it to one another in a truly decentralized way. I think it's rather staggering to believe that we're now at over $1.2 trillion in market cap, 46 million users around the world holding anything from a dollar's worth to billions in Bitcoin in assets. And finally, for a decentralized network, we're seeing in the region of 400,000 daily transactions. That might not be comparable to the dollar, to Visa, to PayPal and other payment networks today, but is indicative of a fast and rapidly growing level of adoption around the world. Not to mention, of course, that to the extent that many countries, governments, central banks have opined against it, most of them are now past that stage. Bitcoin has now earned its reputation as a stable currency, perhaps not from a pricing perspective, but from a security perspective, it's really never skipped a beat. It's never been down. It's never been hacked. And in most developed markets, it's now really been adopted or considered as commodity and therefore naturally adopted into the financial flows, into the ideas of possible usable and attractive assets, not just for computer geeks and early retail adopters, but also for institutions. We've just seen 11 ETFs approved by the SEC, 11 ETFs on Bitcoin. That is pretty staggering, not to mention even further the sheer level of regulations coming out across the world that I think are even further testament that this isn't some geeky, uncontrollable asset class coming about. It is an asset that's here to stay. It's incredible, actually, if you think of it in those terms.
So what do you think is still hindering adoption today?
Well, there are lots of different factors, I think. First, its age, still 15 years old. It's a digital currency. That doesn't mean much still to some of the older populations or maybe the less educated populations. I think the financial system, the banking system, infrastructure is only really starting to look at this now. As I mentioned, regulations, I think regulations are really helping pave the way for greater confidence by institutions. And I really think we are at the phase of institutional adoption. And what that means is that when your local bank, your commercial and retail and private bank out there is starting to embrace this asset, this monetary form, then I think we're going to start seeing more of that becoming available in your own banking and payment networks. You'll see it as an option. I live in Switzerland, and I can buy Bitcoin at the train station. I could buy a train ticket just like buy a piece of Bitcoin. I can use ATMs in this country, and different countries are at slightly different levels, but I think we're going to see much more of that coming out soon. There are other preconceptions as well that are probably still not quite so clear. There's financial education is very low in the developed world, not to mention the less developed economic regions. And quite frankly, a lot of people remain a bit skeptical. They don't really know what it's about, how it works, how to touch it. They might hear headline news around boiling the oceans or it's being too expensive, too volatile, and can't frankly wrap their heads around it yet. That's why, we're talking about it now, and hopefully turn on a few further lights. Another aspect that I think is still vastly misunderstood is its price. Not only from a volatility perspective, it keeps yo-yoing up quite significantly, and that disturbs people thinking about stable currencies. They don't necessarily think about the deflationary effects of their franc or their dollar or their pound, but they still think of it as a stable monetary system. What I mean by the price of it is the way you can access it. If Bitcoin is now at $60,000 and change, people think it's frankly just too expensive. They've missed that trade. They've missed the boat. And that's why a lot of crypto assets are coming about and earning the wallet share of new investors. They believe they've missed the boat with Bitcoin, but actually Bitcoin is highly fractionable, is highly divisible. In fact, every Bitcoin comes in 100 million Satoshis each. A Satoshi is the unit to the Bitcoin, like a cent is to the dollar, except there are 100 cents to the dollar, and there are 100 million Satoshis to Bitcoin. So that means Bitcoin is highly divisible, and you can simply invest a few cents, a few dollars, a few $100 if you like into Bitcoin to get exposure and start learning what this whole monetary network and system is all about. I hope you found this session useful. If you want to embrace crypto assets with confidence, make sure you understand the risks you're up against. Thank you very much, and see you next time.
Yeah, thank you so much, Francesco, for this video. I truly believe you added a lot of value for me personally and for anyone who will look at this video. So if you like this video, don't forget to like, share, subscribe, and feel free to also comment on the video. See you around. Bye bye.